I think if you're a normal person, and you just want the risk-free thing, the risk-free thing is buy Bitcoin, hold Bitcoin forever, and turn off the television, right? I think there's a lot of investors for which that's wise. If you're a professional, or if you have a very particular, entity, right? I mean, or a particular portfolio. If you're a professional investor, a money manager, you've got a particular client. If your client's saying, I want fixed income, I want to generate this much, I need to generate, yield, etc. Well, one thing I do think is, I don't think you should chase after yield with FTX or offshore, unregulated, opaque exchanges. Not wise. If you're going to chase after yield, you should do it with regulated entities with full disclosures, knowing what kind of risks you're taking, and with clarity as to who's accountable for the risk.
In a world drowning in debt, in a system where inflation silently robs you year after year after year, where governments print money without end and the average person carries the burden, there is one financial asset rewriting the rules, and it's Bitcoin. Michael Saylor, chairman of strategy, formerly MicroStrategy, has made his position clear. In his words, it's going to go up forever. Not because of hype, but because Bitcoin represents something deeper. Bitcoin is hope. Hope for a world where your savings can't be diluted overnight. Hope for a future where no central bank can steal your time, your effort, or your legacy through money manipulation. At over $122,000, Bitcoin is breaking new ground, not just in price, but in philosophy. It's the first asset in history that's truly for the people, not the privileged few. No CEO controls it. No government prints it. No one can stop it. This isn't just digital money. This is digital freedom. Bitcoin is the quiet rebellion against a financial system built to favor the few while leaving the many behind. It's a way to opt out, to take back control of your wealth, your future, and your destiny. As the world changes, as the cracks in traditional finance widen, Bitcoin stands as a beacon, unshakable, incorruptible, and unstoppable. The question now isn't whether Bitcoin is here to stay. The real question is, will you be part of it? That's what Michael Saylor talks about what Bitcoin is and where it's all going in this video. Let's get more insight from Michael Saylor.
But I don't recommend anything, because I really do believe there's 50,000 publicly traded companies. The question is, are any of them underpriced versus the risk expected return? And that comes and goes. That's very complicated. And then you've got, there's 50,000 nice pieces of art, and there's 50,000 cool buildings. And those are all things you can invest in. I just think you ought to be an expert and fixated on it. And I take the position that probably they're all going to underperform Bitcoin. And, 29% ARR is pretty good. I mean, a very simple idea is, if you can figure out a way to borrow money long term at 1/3 of that, if you can borrow money at 8%, and you could then loan it to the Bitcoin network at 29%, and you've got a duration on that debt instrument of 8 years to 12 years. Now you're 3 epochs, right? You're probably going to be fine. That's brilliant. I mean, how do you do that? Well, you could have done that with a 15-year mortgage at 2.8% interest 24 months ago, right? On your real estate, right? So if you can do a 15 to 30-year mortgage at low interest rates and just, and then buy Bitcoin, you're arbitraging 3, 6, 8% money versus 29, and that's intelligent. If you can create a company that raises equity or debt to buy Bitcoin, that's intelligent. If you can borrow money at 4%, that's even more intelligent. If you can borrow money at 1% and buy Bitcoin with it, no recourse, more than 4-year duration, I think you ought to do that, right? That would be intelligent. So levered Bitcoin, levered long, as long as it's not mark-to-market degenerate. I mean, like when you're trading 10x leverage, what that means is Bitcoin trades down a few $1,000s, you get forced liquidated while you're sleeping and you lose everything. But a simple idea is, if you have capital and you can hold it more than 4 years, I think you buy the Bitcoin and just forget about it. if someone will give you a loan and they're not going to ask for the money back in less than 4 years, you can consider it. You see, if they're giving you a loan for 1 year, right, you might get wiped out on that, right? Or if they're giving you a loan where you have to actually post additional collateral every day if Bitcoin trades down, right, that's actually anxiety inducing. But when the loan duration goes to more than 4 years and there's no mark to market, well, that's probably interesting. And of course, if you can get out to 8 years, I would kind of say 4 years duration on equity is a no-brainer. 8-year duration on debt starts to feel safe. And I guess my issue with all these other ideas is you can either give me a very complicated entrepreneurial idea and I stare at it, but it's just so complicated. And it's you probably don't even know the way you're going to fail. I might rather you just give me a financing idea like, hey, we can take over this cash cow company for 1 times revenue, and then we can convert its balance sheet into Bitcoin, and then we can lever it up by borrowing $2 billion at 8% interest. I mean, I like that idea better, right? Just a very simple idea. I'm going to borrow $1 billion at less than the cost of capital. The risk-free cost of capital is, fill in your number, mine's 29%, but if you're pessimistic, maybe yours is 12%. Okay, if your base case forecast is 12%, then borrow the money at 4% and it works. The thing about Bitcoin is that I think is important to point out is a lot of the security comes from the optionality to move the Bitcoin from one custodian to another. You can, like, if you had a $10 billion real estate portfolio in New York City, you don't have the optionality to move the real estate from New York City to Tokyo, right? And in certain extents, if you have a large holding of an ETF, you don't necessarily have the optionality to move your holding to a different ETF provider without taking a tax hit, right? Without a taxable event, right? This is why cash creates and redemptions are much less efficient than in-kind create and redemption. If you had an in-kind create and redemption, you could actually take a redemption without a taxable event in Bitcoin, move it to another ETF provider, and then swap that for shares without a redemption. So being able to relocate your asset between various counterparties and various custodians and various places without a taxable event is very important. So if you own underlying Bitcoin and you have it with a custodian and you lose confidence in them or you don't like the business relationship, you can move it to a second custodian without a taxable event. You could do that in an hour, right? Practically speaking, a big company would take more than an hour to do it because just like there's a ton of people on the custody side, there's a ton of people on the institutional side, you know, and so there would be a set of processes you would go through. But that keeps everybody honest and keeps the market competitive because, you know, the mayor of a city knows that you can't move the building, and so they can double the property tax rate and you're not moving the building, and your only recourse is to try to vote them out of office. But if you're a custodian of Bitcoin, Singapore, and you double or triple the maintenance fee or the custody fee, then maybe the Bitcoin finds its way to fill in the blank, another place, Paris, London, US, different country. Or even if you had 2 custodians in New York City, the Bitcoin can move between one and the other. You know, we talk about the 19th century gold issue. Gold was like a settlement T plus 1 year, and Bitcoin is, in the worst case, T plus 1 hour. So if you people oftentimes they fixate, they think the lesson of Satoshi is don't trust any counterparty. I don't think that's the lesson of Satoshi. I think the lesson of Satoshi is if you can store your money for 1,000 years without a counterparty, you've created perfect money. Right? I think, or perfect digital capital. I think that's the first lesson. And I think the second lesson is if you can move the Bitcoin without a trusted intermediary, now you've got an open global network. And what it really means is that 300 million companies can settle with each other. And that means that 50,000 banks can settle with each other. And so this becomes a settlement network. right? When we teach people that corporations are not to be trusted, banks are not to be trusted, and governments are not to be trusted, we become crypto anarchists. But Apple's a corporation, and the hospital is a corporation, and insurance companies are corporations, and Uber's a corporation. And the United States government, for better or worse, does useful things, right? Just like your city government, sewer, power, water, etc. The power company is a corporation. So if you embrace the idea there are some companies that provide you with food, electricity, transportation, airline service, freight, etc., then you're like, okay, companies are probably okay. And if you embrace the idea that you could be like, okay, well, I got to self-custody. Well, like, how's a 12-year-old kid supposed to self-custody? How does an 85-year-old with Alzheimer's self-custody, right? This idea that you should never trust a corporate custodian is also a kind of orthodox, zealous, ideological notion. The truth of the matter is there's a lot of circumstances under which you want a company to fixate on custody, just like we use Apple to custody our photos and custody our documents and the whatever, and you can rail against it, but I haven't seen any crypto anarchist that's proposed a solution to the dependence on Apple and Google and Microsoft that we currently have today. So I think that the deeper idea is not that Bitcoin allows you to avoid depending on a custodian. The deeper idea is Bitcoin gives you a competitive market, a global competitive market for custody, and you have the option to move $10 billion in 1 hour anywhere in the world to any of hundreds of millions of potential custodians. And so that creates a competitive market, a free global capital market, and an arbitrage between every type of custody and every country and every form of possible custodian. And what is it? The last resort, right? As a last resort, you can take self-custody. And you don't have the ability to take self-custody of $10 billion of Apple stock as a last resort. And you don't have the ability to take self-custody of $10 billion worth of real estate as a last resort. And you don't have the ability to take self-custody of $10 billion of gold as a last resort. And so the last resort is useful, but really, a more practical thing you find in life, and every corporation finds this out. It's like when you need to buy electricity or when you need to buy oil, yelling at General Electric or yelling at Exxon that if they don't give you a better deal, you'll just drill for the oil yourself. That's not credible, right? The salesperson looks at you and they laugh at you like, yeah, sure, you're going to start your own petroleum company, drill for your own oil. I bet you will, right? A much better negotiating strategy to say to the gas station, if you don't sell me gasoline at a reasonable price, I will go across the street to your competitor or I will do business with Chevron instead of Exxon. And so generally, if you want to get treated fairly, any business school would say to you, okay, you create a competitive auction and you find the 2 or 3 specialists, when you're the restaurant and you want to lever Coca-Cola for a better deal on Coke and Diet Coke, you don't threaten to create your own, beverage company or do it yourself and create Mikey Cola. What you do is you bring in you have the Pepsi sales guy and you have the Pepsi hat sitting on the table. You say, I just met with the dude from Pepsi and he offered me a better deal. And the Coke sales guy goes back to the district manager and says, Pepsi's in there talking to them, so I think we better give them a better deal. And of course, there's only Coke and Pepsi. That's only 2. As a practical matter, you have to have 2. When there's 1, you're in deep trouble. But Satoshi gave us 10,000, right? 10,000. There's 50,000 banks, right? If you get like 100 custodians competing with each other, you're going to have a pretty good market.
And that's it for today's video. I hope it left you with more than just facts. I hope it gave you something to think about. Bitcoin isn't just a number going up. It's a shift in how we see money, freedom, and the future of finance. But now I want to hear from you. What do you think about Bitcoin? Is this really the financial revolution people are calling it? or just another moment in history? Drop your thoughts in the comments. I read every one. If you found value in this video, share it with someone who needs to hear this message today. And if you haven't already, hit that subscribe button so you never miss a conversation like this. Thanks for watching, and as always, I'll see you in the next one.